Well, good morning, everyone. It's February 14th. It's a Friday. And again, I'm going to ask you the following question. Where has the week gone? Where has the year gone? I mean, time is just flying by. But it's Valentine's Day. It's a very special day. I hope you have someone close to you, friends, family that you love that you could share this day with. It's a beautiful day. I'm going to take my wife out to dinner tonight and celebrate. Tonight, I think it's going to be barbecue night. It's going to be one of those nights. All right, let's talk about market action. So let's talk about coronavirus. That's been the big issue, the big story over the last few days. Japan has announced 250 cases and potentially one death. I'm not sure about the death. Don't quote me on that. But I do know that there's 250 new confirmed cases. The market, I have to say, has been shrugging it off the last few days. So I believe that the market believes that the worst is behind us. But as soon as we were out of this coronavirus, the trade war saga puts us right back in. We just can't get away from it, right? So Huawei, remember Huawei? It was the first company that, first major Chinese company that actually supplies parts for a lot of U.S. tech, was restricted in U.S. It was part of the trade agreement. Now we brought them back in, and now again, we're accusing them. U.S. is accusing Huawei of trade secrets. Now, I hope Huawei stays in the news for a while because it took me about a month to figure out how to pronounce the name correctly. So I'm going to take it for what it's worth. It's Friday. I got to have some fun with you guys, right? All right, so let's keep an eye on Huawei. Let's keep an eye out on whether this poisons the agreement we have with China, because since we went through phase one, we haven't been hearing much about this trade war, and the markets have been very steady. So I'm hoping this Huawei drama is not going to poison the relationship, the financial relationship between U.S. and China, or give President Trump an excuse to break the agreement and start causing trouble. We don't need that, especially going into the election. If President Trump right now has a major lead, it looks like he's going to get reelected, and I'm really, really excited about that, and I'll tell you why. Because statistically, when a president gets reelected for a second term and the market is strong for the first term, and boy, the market has been really strong with President Trump being at the helm, the odds are that the market's going to stay in a very bullish phase. It's happened, I think, 18 out of 20 times. So statistically, we've got that going our way. Now, let's talk about earnings. We have 352, probably about 360 by now, companies in the S&P 500 reporting earnings. 72% have beaten earnings per share. 67 have beaten revenue. Now, I'm excited about it, but not as excited as I sound, because remember, the revenue is steady. I like the revenue, the 67%, but the earnings per share, remember, they were beaten down. The expectations were beaten down before the reports came out. So the fact that they're higher is not that amazing. Let's just say that. But with that said, I'll take anything I can get, and 72% beating earnings per share is a good sign. In the financial sector, let's go to the financial sector. Notice it's congesting. Let me go to a little chart here. It's near all-time highs. Looks like it's going to come down to the 50-day line. But I do like the fact that volatility hasn't been increasing. 76% of the financial sector is done reporting earnings. 69 have beaten earnings per share, and 75 have beaten revenue. And again, earnings per share are a little foggy because they've been beaten down, but not revenue. And that's very, very, very positive. I like that. That's telling us we may see continued upside. More, I'll tell you why. Because the next quarter, the first quarter, we're right now, this is earnings for the fourth quarter of 2019. The first quarter, which is actually the second quarter, it's the second calendar quarter of 2020, but it's the first earnings reporting calendar of 2020. Just want to make sure you guys understand it and not thinking, why does he keep talking about the fourth quarter? We're done with the fourth quarter. Well, on a calendar term, yes, but earnings are reporting right now for the fourth quarter. So financials are doing better than expected, and here's why I'm getting excited. Remember, the market always discounts everything ahead of time. And next quarter, we're actually expecting the first quarter of double-digit growth. It's still too early to speak. It's only 8:19 here Eastern time. It's like 5:18 Pacific time. So next quarter, we're expecting double-digit growth, earnings and revenue, and those numbers are going to be very hard to beat down because Goldman, Morgan Stanley, and Bloomberg are all expecting 10% or 11% EPS growth, and that's going to be hard to break down. So we're really expecting a major change, and in all fairness, with the GDP being above 2%, with the economy rocking and rolling, I don't really see a reason for that not to happen. So keep your eye out on the financial sector. It's looking good, but I'm still expecting a little pullback before we go higher, but the earnings front is good. Now, my favorite sector, technology. Look at this trend. I mean, this is a trend, and yes, it is grossly overbought. But with that said, 86% of tech stocks have beaten revenue, have beaten the numbers, 86%. 87 have beaten EPS, and 83 have beaten revenue. Those numbers are fantastic. Even with the numbers being beaten down before this quarter started, these are fantastic numbers. But with that said, I do believe tech is a little overbought. As you could see here, we're going higher. Momentum levels are going higher. Here's a better example. Momentum levels are going higher, but the RSI oscillator can't generate. Even with the divergence, it's overbought. I mean, this, folks, I want you to know something. This is the highest momentum levels we've had in 5 years. So the fact that the market will cool off is not going to be a big surprise. The question is, how much will it cool off? And I'm not expecting a major cool off period. Here is something I'm very concerned about. This is the 10 major sectors. These are the 10 majors. This is the S&P 500 divided into its respective sector. Look at utilities over the last month. It gained more than technology. As a matter of fact, the only reason why technology is leading is because of what happened last quarter and the quarter before. If you look at it on a 1 month basis, you'll see that utilities is actually outperforming technology. But the point here is technology and utilities should never be next to each other, because utilities is the most defensive sector and technology is the most offensive sector, the most speculative sector. So the fact that they're close to each other and the fact that consumer discretionary is all the way down here instead of being next to technology, because technology and consumer discretionary are very close, is not good. It's fragmenting. This market is fragmented, overbought, fragmented, needs to cool off. But earnings have been amazingly good. Fundamental data has been really good. Unemployment data has been really low. We are in a perfect storm for more upside, especially with the interest rates low. Now, remember, it's Friday. What does Roger do every Friday? 3 top stocks. So let's do them now. PCG, utility stock. Utility stocks, we got 2 tech stocks and 1 utility stocks. Listen, what can I say? This does not happen often. This does not happen often. We're having a very defensive period because of utilities rallying, and we're having a really good speculative period. And everything else is kind of in between. But again, Pacific Gas Electric Company, this is the top. This is the most strongest stock in the S&P 500. It's doing a turnaround. The stock was sold off. It's doing a turnaround. But over the last month and a half, 2 months, it has been killing it. I mean, killing it. Next one, this stock has been on our CSI list for, I think, 3 weeks in a row. Notice what I tell you, when a stock goes on my list, sometimes they stay there forever. I think this is the 5th, maybe 6th time we're talking about AMD. All you have to do is look at my videos going back a few months, and you'll see. Look at the Friday videos, because Friday is when I talk about top stocks. But AMD has been one of the biggest gainers in years. Look at this trend. I mean, this is strong. Let me clear up all these lines that we put here during our analysis sessions. But I mean, look at this trend. Look at the 3-year chart. It just keeps going higher and higher and higher. AMD is a big competitor of Intel, and it's just killing it. But again, it's due to cool off. Not a major cool off, just a little cool off to give us a little break in trend and a little more upside after more buyers come in. It's going to happen. Finally, the last stock in our list, the last top 3 stock, LRCX. These 2 are chip stocks. Chip stocks are what's rising right now. Usually, technology and consumer discretionary are really close to each other because you got Amazon, Apple. Those stocks and a lot of other stocks, Netflix, they don't have a really clear positioning in terms of whether they're consumer discretionary or tech. They're kind of both, but in this case, LRCX, AMD, that's clearly tech. And that's why you're seeing this big divergence between consumer discretionary and technology, because semiconductor stocks, they have a lot of exposure to China, and they've been lagging all year behind. And now with China and U.S. resolving their differences, We'll see how this new Huawei, this company that I can barely pronounce, if it's gonna sour the pool. But for now, things are looking good. So again, LRCX, AMD, PCG. Folks, markets are overbought right now. I've been warning you. We're seeing massive divergence between momentum and price. I showed it to you today. For example, right here, you could see the divergence. We have upside momentum in price, downside momentum in the RSI oscillator, and it's overbought, to add insult to injury. So there's a lot of momentum. Also, we've got the overbought levels and the coronavirus. So you got divergence, overbought levels, and volatility index. Let's look at the volatility index. It may be going higher too. It's still above 10, but volatility is, notice, moving higher. Moves higher and lower, moves higher and lower. But again, I'm not expecting it to come down all the way to the 10, to the complacent level here. I'm expecting more volatility. So you've got volatility, overbought levels, divergence. There's a major shift in how we're going to trade this market, folks. There's no denying it. So to prepare myself, and if you want the details, I've put together a new comprehensive report called Diamond Roadmap. This is the real deal. It takes everything into account that I'm looking to trade and take advantage of over the next 200 days. Now, it takes you through how I see the next few months playing out, actually the next 3, 4, 5 months playing out. And it's very detailed. And most importantly, how you can take advantage of it and how you can gain an unfair advantage. With the right strategies at your disposal, I think we have the opportunity to make good money over the next 200 days. So more money than most investors have made in a decade. I really mean it. You want to get the Diamond Roadmap. Again, it's not just strategies. It's me telling you what strategies I believe will work best out of my top 3 strategies or 4 strategies in the current market cycle. And the strategies there are designed to take advantage of a bullish cycle, range-bound cycle, and bearish cycle. You've got divergence. You've got momentum levels overbought. The market is fragmented. Folks, we don't see utilities and technology next to each other very often. Not at all. We just don't. It doesn't happen very often. And the divergence we're seeing on the S&P 500 does not happen often at all. So again, I'm seeing something very interesting playing out over the next 197 to 200 days. You want to take advantage of it. The Diamond Roadmap will give you an unfair advantage. Follow the link below. Again, with the right strategies at your disposal over the next several months, you're going to get an unfair advantage. Do yourself a favor. Check out the Diamond Roadmap. Do it now. Follow the link below. Get this report.